This video is for educational content only and is not financial advice. Always manage your own risk. Today was not a simple red market day. It was more interesting than that. The Nasdaq dropped while the Dow held up better. And when the market splits like that, I do not want to treat every index the same way. That is where traders get caught. They see one headline, they force one bias across everything, and they miss the real warning sitting inside the structure. So in this video, we are looking at the Nasdaq weakness, the Dow comparison, and what the trend-following structure was saying before the move became obvious. The story starts with the split. The Dow finished stronger while the Nasdaq slipped. That tells us the selling was not evenly spread across the entire market. The pressure was concentrated in technology, chips, and AI-related names. That matters because MNQ and NAS 100 are much more sensitive to that part of the market. If chips are weak, if Nvidia and semiconductors are getting hit, the Nasdaq can break down even while the Dow looks calm. That is exactly why I like comparing MNQ against YM. On the YM 1-hour chart, the Dow side is not showing the same kind of urgent breakdown. It is holding up better, and that relative strength is part of the story. So the first lesson is simple. Do not trade the whole market as one instrument. If the Nasdaq is weak and the Dow is holding, that is a market split. That means the cleaner short pressure is more likely to show up on MNQ, not necessarily across every index. Now look at the MNQ 1-hour chart. This is where the warning gets sharper. The 1-hour structure is showing bearish pressure. The trend following read is not giving a clean bullish environment, and price is pushing around the short entry zone instead of reclaiming strength with authority. That does not mean we blindly short every candle. It means the bounce has to prove itself. If price pushes up but cannot reclaim and hold above the key structure zone, that bounce can become another lower high setup. That is the part newer traders often miss. A green candle after a drop is not automatically a reversal. Sometimes it is just a reaction into resistance. That is why the 1-hour matters. It shows the intraday pressure and where the market is trying to decide whether this is a real recovery or just a relief bounce. Now move up to the MNQ 4-hour chart. The 4-hour chart gives us the bigger warning. This is not just one bad candle. The higher time frame view shows pressure building through the structure. When the 4-hour agrees with the 1-hour, I pay closer attention. The 1-hour can show the trigger. The 4-hour shows whether that trigger has weight behind it. And right now, the Nasdaq side is not giving me the same clean strength that the Dow side is showing. That is the message. It is not panic. It is not prediction. It is structure. When Nasdaq is weak, tech is under pressure, and the 4-hour structure is leaning lower, I want confirmation before trusting the upside. Now zoom out to the daily MNQ chart. The daily chart is where we separate a normal pullback from a real warning. The bigger trend can still be intact, but the current candle structure is telling us buyers are being tested. If MNQ cannot reclaim strength, then the daily chart starts to look less like a clean continuation and more like a deeper correction risk. That is the line I care about, not the headline, not the emotion, the line between a pullback that gets bought and a pullback that starts breaking structure. This is why the Dow comparison matters again. On the YM 4-hour chart, the Dow is not behaving the same way. It is holding up better. That does not make it risk-free, but it tells us the weakness is selective. Selective weakness gives us information. It says the market is rotating. It says money is not leaving everything at the same pace. And it says Nasdaq traders need to respect the extra pressure from chips and AI. So here is the trading takeaway. For MNQ and NAS 100, I do not want to chase the downside after the move already happened. I want to see what price does at the next structure test. If MNQ rejects from resistance and the 1-hour stays bearish, the short side still has a cleaner argument. If MNQ reclaims the short entry zone, holds above it, and the 1-hour begins to flip, then the bearish case weakens. Until then, the warning is active. And the warning is this: the Dow can hold up while Nasdaq breaks down. That is why structure matters more than the index headline. Follow the chart that is actually moving. Respect the time frame that is confirming. And do not force the same trade across every market just because the headline says stocks were mixed. This is black bear trading. Stay disciplined, follow the structure, and trade the confirmation.